Hi there, pro traders, and welcome to another market review held by yours truly, Ian Giffen, on behalf of GoPro Trading Academy and, of course, the Convex Trader. All right, so last week was a bit of a slow week overall. But when I say slow, in terms of the number of setups and an overall directional bias, which is obviously what we're looking for all the time, especially where our core strategies are trend-based strategies. Having said that, there was quite a bit of action on the lower time frames. And one thing I would just like to point out there, just remind you folks, is please do remember that when we have really significant news coming out and interest rate announcements for the US, especially in the current volatile environment, certainly count. They're equally as important as non-farm payroll. And I'd say that at times like this, even more so. So always be very cautious about trading around those times. Of course, once the news is out, very often that sets us up for really, really good trading conditions. I would say that certainly for the lower time frames, running right through into Friday evening, we had some great conditions across certain instruments for the lower time frames. But overall, for the higher time frame trades, certainly H4 Impulse Daily and so on, not so much. And before I carry on with this as well, I'd just like to point out that, folks, we are going to be having our training on the technical analysis methodology that I teach many of you folks and that we've been going through in our Discord channel as well in some detail. We're going to be doing a technical analysis workshop focusing on this advanced price action analytical technique. And we're going to be doing that really in commemoration of our second birthday at the Academy. And that will be coming up probably in the second week of July. Look out for the dates. And I just want to remind you all, whoever you are, if you are engaging with us in conversation at the Convex Trader Facebook page, then you will stand to potentially get complimentary access to that workshop. And you will also get complimentary access to the VIP session as well, which means that you'll have access to the recordings and you'll be able to ask me any questions that you'd like, and there'll be a lot of interaction on that day. So please make sure, again, as always, that you are engaging with us in conversation on our Facebook page at the Convex Trader. All right, so without further ado, I would say that the theme of last week was really dominated by that major news that came out, obviously with the hawkish stance being taken by the Fed. That wasn't unexpected, but nevertheless, it caused quite a lot of ructions in the market, and there was liquidity coming in and going out of the market. There were some gaps in liquidity over that period as well. And of course, that's why you really need to be cautious with those lower time frame strategies. So starting here with the weekly time frame on the Euro USD, you can see that we had really nothing much here, a bit of a doji or a hammer candle for the week on the Euro, finding support at that previous low. Now, this wave is not yet over. This low hasn't yet been ringed. We have to see what happens during the course of this week. But that certainly is a potential warning sign. It's certainly not a sign of strength. It only just managed to be an impulse candle with a close below the previous candle's low. And just looking at that on the daily time frame, you can see that. Ooh, let me just expand that. There we go. You can see that we had on Wednesday in particular that significant retracement. I beg your pardon, Wednesday into Thursday, and then Friday was just an inside bar on this particular one. So, so far today, it's just another inside bar. Of course, the day still has some way to go. All right, so we are looking potentially for this to continue. We don't know that it will. We're not predicting that, but this is at the moment still a potential class 1M pattern. It's a strong class 4W pattern right now. So certainly still more bearish than bullish at the moment, but we do need to see the market break through that preceding support level. All right, so I normally spend a bit of extra time on the Euro because it's such a bellwether instrument for us. Right, so on the cable there, you'll also see last week with that significant hammer candle there, it really did try to break through that preceding support level. The additional weakness on the pound compared to the Euro visible here in the significantly stronger trend on the weekly time frame. But the picture really on the daily time frame is very similar. looking for this to also continue in a bearish direction. It pulled back inside of our HTC channel also on Thursday, obviously Wednesday into Thursday, but still a potential class 1M pattern, and looking for this to break back out of the HTC channel. Well, potentially anyway. So let's wait and see. We always wait for the market to prove itself. And remember, depending on how aggressive you are with your strategies in terms of whether you're a channel trader or a pattern trader, you need to take that into account. All right, here on the dollar yen, another hammer candle, but at least this one's supporting the continuation of the bullish uptrend on the weekly time frame. So we're still very much in an impulse wave of a trend there. And of course, with the impulse candle on Friday, I'm sure many of you have taken a daily impulse on this particular one. We've got a nice outside C close. All of the boxes have been ticked on this particular one. Just a bit of a pity that it's such an extended setup candle. Not much happening so far today, but there's absolutely nothing wrong with that as a trade, regardless of the outcome. So let's wait and see. And obviously, if we do get this continuation, that will be perfect for trading H4 impulses as well. Okay, so dollar Swiss, you can see we had significant movement through the course of last week, and in fact into Friday. This is one of the pairs that we traded on the lower time frames. There was some nice volatility there for us to trade, but so far today, nothing much happening. Nevertheless, there is the potential for this high to be ringed through the course of this week. If that does happen, and it's looking like it's more likely than not, then of course that will indicate that this preceding bullish trend will be over with a breakdown in that bullish cyclicity. So remember the 3 R's. We assume range first. There is always potential for resumption, and then alternatively looking for reversal. So just quickly on the daily time frame, you'll note that we're still very much inside of that HTC channel. And there you can see also on Thursday where there's a very strong bearish movement on this currency pair, bouncing pretty much off of that 55 EMA. So that's why I think it was Thursday actually where we had a lot of activity on this. We got some nice trades in there on the lower time frames as well, but certainly very volatile with that very strong bearish candle. USD CAD Friday giving us a breakout of the HTC. Remember, we also look at the point B for strength in this. The fact that it did try to break above that preceding resistance level, fell back inside. So it is a bit of a sign of weakness. However, we are outside of the channel. So far, it is still finding resistance at that preceding high, that point B, as I mentioned, and that's obviously on the weekly time frame. On the daily, though, you can see it's pretty much the same thing. The HTC channel, certainly the upper bound of the HTC channel in the same place as on the weekly, and there you can see where it bounced off of that on Friday. We are very much looking to see if it will be able to get above that. But again, today, Monday, very slow day so far. Nothing much to write home about. I would say we had some action on the yen pairs, but I'll get to that in a minute, early this morning. All right, Aussie, similar picture. Also potential for this low to be ringed. And then we had this breakout previously. So this is still a potential trend, albeit a weak one. And of course, that indicates that there's a higher probability that this will turn out to be a false breakout on the weekly time frame. So not really something we're looking at. Although, let me just go back to that quickly. I know that many of you will notice that last week we did get another close back outside of the HTC channel. And you're probably looking on the daily time frame for a bearish resumption to get into a daily impulse. And you may well have taken that this morning with Friday's bearish candle being an impulse candle and ringing Thursday's high as well. Not looking great at the moment, unfortunately, which is very typical for a Monday, but that doesn't mean the trade's not going to work. So otherwise, a good setup if you are trading, if you're happy to trade that level of weakness. All right, Kiwi, similar picture, but obviously we know that the New Zealand dollar has been weaker than the Aussie with the this nice the fact that the market failed at this preceding resistance level, as we discussed a couple of weeks ago, but it did roll over in the last couple of weeks, but another one of those hammers. So again, finding resistance on that support level. So you can see that this is a pretty common picture across the majors and the minors. So just looking at the daily time frame here, another one where potentially we'd be looking for this to roll over and give us a bearish setup on a daily impulse. Still inside HTC, we know that, but obviously that's not an issue for the daily impulse. But it is also a potential class 1M pattern. So let's wait and see. But as I said, today, everything seems to be coming back in quite a strong retracement. All right, so let's move on to the yen pairs. As I mentioned, there was a bit of action on the lower time frames on the yen pairs in the early hours of this morning when the Asian market opened. But apart from that, things have been dead today. So you can see that there's not much happening right now, certainly not on the euro yen. But anyway, on the weekly time frame, you'll see that we did get that preceding high ringed by last week's candle. So we still have a potential trend here, but nevertheless, what I would say is that the fact that the market has come down and failed on what was a resistance and is now a support level quite spectacularly with last week's hammer candle means that this might well be a short-lived retracement. And so far today, it actually has potentially already ringed that low. So we might be looking at a bullish resumption over here, dropping down to daily. For those folks who don't wait for the candle close, you might already have decided to take an aggressive class 3 buy over here. So this is a class 3 pattern. The reason why, of course, is that Thursday's close, which is the C close, did not close below the preceding low, which is the A's low. So this is a class 3 W pattern with this bullish impulse candle. For those of you who are a little bit more aggressive, you might already have jumped into that this morning. And nothing wrong with that. It has a lower success ratio, but your reward to risk ratio is high. So all good. GBP yen, not so much. You can see that we've had that the high of the previous week ringed by last week's candle, which means that the market has failed at that resistance level, and any potential bullish trend over here is, at least for the meantime, over. Inside HTC, no cyclicity over there for us to use at all. On the daily time frame, though, you can see we are outside of our HTC channel. One thing to bear in mind, of course, is that that resistance level is very much still intact. Excuse me. So we just need to be cautious about that. But those of you who trade in class 1W patterns would probably have jumped into this on Friday's open already, and you're already into quite a nice trade. So it is a class 1W pattern. It was inside the channel, but I know that many of you just trade the pattern classes. All right, so next up should be the Swiss yen on weekly. Here we have one of our best performing pairs at the moment. And again, folks, as always, what I teach you is always trade the conditions. Make sure that you only take trades that are in the appropriate market conditions for your strategy. And for core strategies, this is obviously one of the best with this intact, strong bullish trend with an outside C close. It ticks all the boxes and has done for over a month already. But last week, what we also had was a confirmed phase one with the candle closing above that previous wave high. So we've moved from an unconfirmed phase one into a confirmed phase one, and therefore also a confirmed bullish trend. Daily time frame, obviously very tradable here as well. When we had Thursday's close, ringing that preceding low, giving us another potential bullish resumption outside of the HTC channel. C close wasn't outside of the HTC channel, but that's about the only box that wasn't ticked. Everything else was. We had a very nice daily impulse on this pair already a while ago, obviously. We spoke about that previously, but I'm sure that many of you jumped into a bullish daily impulse on this one already at Friday's open. So that one doing well, and you should be able to get to break even by this evening, depending obviously on how today's candle closes. But that's looking pretty good. Also, obviously, very good for trading H4 impulse. And there's the setup. So where was that? That was, in fact, the first candle of the day. So if you're using our trade manager, it would have taken your trade, assuming that you instructed it to do that at about 4 a.m. this morning broker time. So that's a good one. Otherwise, you would have had to have been up early if you live in Africa or Europe, as many of us do, and you would have needed to obviously get that trade in manually there, but it's doing very well. So hopefully as well, should be able to start trailing the stop at the close of this current candle. Right, so Swiss yen obviously looking very good. Another one that's not too bad, except that we did get a retracement last week. So in terms of the bigger picture, CAD Yen has done reasonably well for us over an extended period of time. But last week did show a pullback. And having said that, it has respected the support level, which is the upper bound of the HTC. Bounced off of it nicely last week. We need to see if it will continue to do that this week. We're looking for an end of this bearish retracement. And if you're a hybrid trader, obviously you'll be looking at the cyclicity on the lower time frame, which is obviously still very much intact. We'll be looking for a breakdown in that bearish cyclicity and a resumption of bullish cyclicity to either maybe trade a hybrid if that's what you like doing. And certainly that's the best trade that we've had on this pair for a while, was actually the hybrid that we got into. We spoke about this before. It was on the 26th. Okay, so that was a very nice one, and there is potential for more. Obviously, if this does continue in a bullish direction, we do get that resumption of bullish cyclicity, then you could also look to trade this on H4. And in fact, seems that's one extended bearish wave looking like that in the H4 time frame. Looks like cyclicity has in fact gone a bit bullish over here. You may have already, if you're a hybrid trader, jumped into a trade this morning around that same time, actually also 4 a.m. broker time. All right, so that's CAD Yen. Moving to the last two of our yen crosses. Aussie Yen still inside that HTC on the weekly time frame. Excuse me, I've still got a bit of a cough. And you can see that we don't even have a potential class 1W pattern over here with that close inside. So nothing for us to do there. This is showing weakness, obviously, because it did pull back inside of the HTC channels, well, a week ago, in fact. And it's been chopping around since then, but we are obviously looking for a bullish resumption. And this is already a class 1W pattern. So if that's something that you are trading, and then you should be looking to jump all over this. But obviously also if you trade in the lower time frames, or at least H4 impulse, then that's another one where we've seen that low ringed, with Friday giving us that higher high. So this morning you may well have been looking for an H4 impulse, obviously quite aggressive to be getting in this early, but there it is again, and it's the same candle once again. If you got in a little bit later, which would have been well, midday broker time, the close of that candle, then you would have been in this one for well, just coming up to 2 hours. So also not a bad trade, lots of potential there, but again, we don't predict the outcome of our trades, we just work our edge. Right, last of the yen crosses on Kiwi Yen, same kind of picture, inside HTC channel, that high also ringed by last week's candle, so nothing doing for us there. And on the daily time frame, similar picture again. This is a class 1W pattern, Friday ringing that low, and almost identical setup, really, if you like. If you're going for the H4 impulse, then you would have jumped into that early this morning. If you're a hybrid trader, then probably the same thing, because we've had phase one, phase 2. You might have got in, well, I mean, if you're really aggressive, you would have looked to enter this very late on Friday. Obviously, we don't recommend that you do that. So you might have just jumped into this one first thing this morning. So nothing wrong with that. Very aggressive, but nevertheless, remember, these Asian pairs are fine to trade in the early hours of the morning. Okay, so let's have a look at all of our other crosses, starting with the Euro crosses. Euro GBP, honestly, I'm going to run through some of these quite quickly, because that's really been pretty much not worth looking at all. Tested that resistance level, fell all the way back on the daily time frame. Really, it was just one day up, one day down. There was nothing for us to do there at all. You can see I'm not even bothering to update my analysis on many of these, because there's just much better stuff to look at. All right, Euro Swiss, a bit more aggressive, obviously, with that Swiss franc strength that we saw last week, and that bearish impulse candle and impulse wave giving us that close, which helped drive the market out of the HTC channel on Thursday. So come Friday, you may well have been looking to short this already with your H4 impulse. And obviously, it was getting quite late on Friday. So this was, in fact, the candle that closed at midday. I think some of you still took that trade. Unfortunately, it pulled back, as it very often does on a Friday afternoon, but looks like we're getting a nice resumption on that one now. So that should be okay. All right, EuroCAD bouncing around on top of that support level, which is obviously the lower bound of our HTC channel. And really, that's just a bunch of nothing on all of the timeframes. Not interested in that at all. Likewise, Euro Aussie, it's really not worth bothering with any of these. And again, I don't bother updating my analysis for something that I'm not going to be trading. I have done it in the past for you guys, but quite frankly, I think you can all see that that's absolute rubbish. Right, so moving on to the GBP crosses, but something more interesting here. Obviously, the Swiss franc strength again against the pound in this case. Here we had that very strong bearish close. Excuse me, my voice is still playing up after last week, where I really couldn't speak. But in any case, although we did have the inside C close over here, which is a pity, it is still a valid channel trade with that bearish breakout. So you'd be looking for a bearish daily impulse on this. This is very strong, so we need to get that retracement before we can do that. It really has just been one way straight down from the middle of the HTC channel over the last couple of weeks. So still waiting for that. Well, we need to wait for that pullback if you're trading that on the for a daily impulse. But of course, if you're trading this for the H4 impulse, then Friday would have been game on already. I don't think, yes, that's the only one there, which again was the candle that closed at midday on Friday. It was also not, well, let me put it this way, it was a low test candle, so it's a bit of a bullish candle with that closed in the upper half. So that's one of the potential rules that we have, or one of the main rules that we have for being conservative on the setup candle, is to have a close in the correct side of the candle. So you didn't get that. If you didn't get that, there was obviously another opportunity this morning, and I think that one maybe just made it. So any case, it's something it's worth keeping your eye on this one. I don't trade these on the intraday timeframes. They're all a bit too expensive, regardless of what broker you're looking at. I prefer to trade just the majors, the minors, and the yen crosses. Right, GBP CAD, we've got this bullish engulfing impulse candle for last week. So that really put paid to that, that bearish wave. So although it's not actually a ringed low, of course, you guys know that I treat it as such when we have an engulfing candle. So I'm assuming we're back into a bullish wave here. And of course, the cyclicity on the daily time frame backs me up on that, with the phase one followed by phase one, a bit of an aggressive reversal. Back inside HTC, nothing for us to do. So we move on. GBP Aussie, absolutely nothing. That's weekly, let alone daily. And GBP NZD, likewise, weekly, daily, a whole bunch of nothing. CAD Swiss, again, that Swiss franc move showing a very strong bearish impulse candle for the week and giving an impulse wave as well. But here on the weekly time frame, very much inside of the HTC channel and no valid pattern either. But on the daily time frame, Friday did give us that outside close. So again, you will probably have dropped down to H4 on this already this morning and be looking for a short, which unfortunately doesn't look like, with this slightly messy price movement that we had, which is typical of a Monday morning. It doesn't look like we actually got a proper setup there, but there were others. So, right, Aussie Swiss, again, Swiss franc showing strong movement, bearish breakout. Doesn't look like we have the same bearish movement this morning compared to many of the others. Absolutely not. We haven't had any semblance of a bearish impulse candle here, but we might get one soon. So keep your eye on that one as well for H4 impulse this morning. Aussie CAD, also another nothing burger. Now, again, this is an example of an engulfing candle where I'm assuming that if we back into a bullish wave, we might not. I mean, this could well roll over during the course of this week and make a lower low, but the odds are very much in our favor that it's going to continue coming back up inside the HTC channel and ring that low properly by the end of the week, and show that we don't have any kind of bearish cyclicity and no breakout either. Aussie Kiwi, strong bearish impulse candle here. So we're seeing a move away from that sustained Aussie strength against the New Zealand dollar over the last several months. with this breakdown of bullish cyclicity showing very clearly last week. A lot of whipsaw as well. I'm glad that I wasn't in anything here. I haven't even updated the analysis. Obviously, well back inside of our HTC channel, which will have advanced by now. So that is the top of the HTC already. So just to illustrate why we're not looking at that. Right. So first of all, Kiwi Swiss. Okay, last of the Swiss franc crosses against the New Zealand dollar in this case, bouncing off of that support level. I know many of you are class 1 pattern traders, so you would have already been looking to trade through that bearish candle last week. And of course, that was on Thursday as well, where we got the outside close, all the same picture, which is why you've got to be quite careful about not overexposing yourself. And here on the H4 time frame, that would have been a class 3 M pattern setup. And you'd still survive that. You'd be in this trade using the 3-6 rule, waiting for a proper bearish resumption on that. But Monday is typically like this, not always, but as a rule, yeah. Okay, so Kiwi CAD, another one where nothing happened, another bullish engulfing candle where I'm assuming that we're seeing the end of that bearish cyclicity, and confirmed by the cyclicity here on the daily time frame back inside that HTC channel. All right, so that's the currency pairs. Looking quickly at gold, I've heard a few comings and goings about gold, certainly on our Discord channel over the last week or two. Folks, you always got to remember that you got to limit your downside. Make sure that you are rigorous in protecting your downside with a hard stop. The market can get very volatile, especially on the lower time frames. But here on the weekly time frame, you can see that over the last month or so, very little has actually happened. Last week was obviously bearish. And we did have that potential bearish breakout, especially with the advancement of our HTC channel to narrow it down quite significantly. And yeah, there was that bearish breakout Monday, I think it was. So that didn't last long. It pulled straight back inside the HTC channel. So I'm not sure why anybody would be trading this, to be honest with you. I know there's gold bugs out there, but really it's about finding the instrument with the best trading conditions. Doesn't matter what it is. Right, so coming to our indices, we all know it's potting there, and no major surprise at all that at long last, with all of the inflation data coming out, we're seeing a proper bearish market on in this case, the Dow Jones. So we've got a class 1 M pattern here. I'm sure many of you noticed that already a week ago. So I'm no doubt that many of you were short on this and have been short on this already for a while. Strictly speaking about the daily impulse, we did get that set up, obviously close of Thursday as well, after all of the interest rate announcements coming out of the US and all the other news. It hasn't really gone anywhere yet, obviously, but it is certainly a valid setup. So good on you for taking that. Although obviously you might have preferred to do it on the S&P 500, where it's a very similar picture. Very similar indeed. And of course, these are all good for H4 impulse as well. And the NASDAQ, which is the only one with an outside C close in this class 1 M pattern. And likewise, you would have looked for that pullback and waiting for the market to keep going down. Now, we don't assume that it will. This is not about prediction. It's about working your edge. That's all you need to do. All right, so oil obviously showing a bit of a bearish correction through the course of last week, but it's still very much inside of the HTC channel here on the weekly time frame and on daily as well. So I haven't really done anything here. In fact, I don't need to update this because this is in fact still valid. So it is showing a general bearish move, obviously with inflation data and the increase in interest rates and the threat to, well, slowing down the economy as they do that. They make money more expensive. The demand for oil dropped off a little bit, but I wouldn't bank on that necessarily doing much more. But looking at Bitcoin, obviously, and cryptocurrencies, that's obviously been the story of the last month or two. The continued, I wouldn't call it collapse, but a lot of people are calling it a collapse in the price of Bitcoin, hovering around the $20,000 mark. I'm still waiting for another buying opportunity. I think my average purchase price for Bitcoin is just under $5,000, and my average sell cost is just over 40. So I'm happy. long ago covered all of my costs on that. So really in it now, just to hold on to it and maybe find another buying opportunity, but we certainly have not had one yet. This is actually a good example of the 3 Rs where we had a bearish market before and where it went into consolidation for quite some time, over several weeks, in fact. That was the first of the R's, is range. But instead of reversing, this one resumed its bearish trend. That's pretty much the case for a lot of the cryptos, for folks who spent a lot of money on NFTs and all of that. I think that if you've been careful about that, you'll be fine, but there's a lot of crap out there as well. So just be careful. Remember, this is all about managing downside first, and then you can let upside look after itself. All right, folks. So that's it for the week. For those of you who have joined me live, if you've got any questions, please do pop it in. Otherwise, have a great week's trading, folks. And if you do have any questions for me, especially if you're watching this as a recording, please do pop it into the comments below. If you're watching it on YouTube, don't hesitate to subscribe to the channel and hit that notifications bell. Remember, we are doing live training on Discord over the course of the next several weeks. If you want to join that, then there is a link on our Facebook page at The Convex Trader, where you can join up to come and have a look at our live training. But most of that is going to be restricted to folks who are engaging with us in our conversations on the page. So please make sure that you do that. Not only will you get free access to our live trading room, but you are likely also to qualify for a complimentary ticket or invitation to our workshop next month, where we're going to be going through all of our technical analysis, advanced price action methodology in detail. You don't want to miss that. All right, folks, have a great week's trading. I'll chat to you all soon. Bye for now.